In this video, we're going to be talking about moving averages. And if you've been trading for any amount of time, you've probably had this happen. You find one of the strongest stocks in the market, you buy it, and almost immediately it starts pulling back. So next time, you decide you're going to be patient. You wait for the pullback. But now you've got another problem. Where the hell do you buy it? This is where moving averages come in. Three of them: the 10, the 20, and the 50-day moving average. But David, what if I want to pick one moving average and make it my favorite? Well, that's going to be a problem because stocks usually show a tendency to respect one of these three moving averages during an uptrend. Basically, each stock has its own personality. I like to think about it like I'm about to fight a samurai swordsman. Before I attack my opponent, I'll want to figure out what stance they're going to be fighting from. Because if I can't read their fighting style, I'm going to prepare the wrong attack and the wrong defense. And our interaction with stocks behave the same way. Some of the strongest stocks in the market, the really fast ones, fight from what I call the aggressive low stance, which is the style of the 10-day moving average. Others fight from a balanced middle class, the 10-day moving average. And some need much more room and fight from a wide high stance, the 50-day moving average. If you pre-select a favorite moving average, you can incorrectly read the stock, leading to unnecessary losses. But once you learn to identify which stance a stock is trading from, moving averages can solve some of the biggest problems you'll ever face as a trader. Just moving averages alone can tell you when you're chasing, they can help you identify where the pullback is going to end, and they can help you understand the personality of a stock that you're trading. Which is why if I could only keep one indicator on my chart, it would be the moving averages. I want to buy stocks from moving averages, but there are definitely times where I do not. And the best part is the moving averages themselves will tell you when not to. The first question we want to answer is this stock actually trending? This is for the traders who buy a stock and after the trade loses, asks themselves, why did I buy that? Let's start by identifying the trend with the moving average, because one of the easiest ways to lose money is by buying a stock that isn't even trending in the first place. Trends are the gas, and we don't want to enter a race with no gas. Here's a chart of something that's not trending. How do we know that it's not trending? Because price is contained within the middle of the moving averages. Like a prison, price is trapped and there's resistance ahead. Now compare that to this, where we can clearly see the price is above all three moving averages. The 10-day is above the 20 is above the 50, and every time the stock pulls back, buyers are stepping in and pushing it higher. That's a completely different environment. Price should be supported by your moving averages, not trapped by them. By the way, don't forget to hit the like button, and thank you in advance. But now we have another problem: chasing. The strongest stocks are usually the hardest stocks to buy because everyone can see that they're strong, and that creates FOMO. Imagine you've been watching this stock. Day 1, you don't buy it. It goes higher. Day 2, higher again. Day 3, another massive green candle. Eventually you think, okay, screw it, I'm getting in. And almost immediately the stock starts pulling back. You might think you picked the wrong stock, or maybe the stock hates you specifically. But I promise it's probably just an entry issue. You may have picked the right stock, you just picked the wrong location and the timing too. But fear not, fearless FOMO chaser. Moving averages give you a way to see what's extended as well. Look at the distance between the price and the moving average. The farther price becomes stretched away from its moving average, the more extended the stock is becoming. And you know what people say about chasing? Don't do it, because stocks can pull back quickly. Instead, let's analyze the stock, just as if we were reading an opponent. Imagine you're a samurai. You walk into a fight against a swordsman you've never seen before. Do you immediately start swinging? Look at the way he's holding his sword. Look at the distance he's keeping, his cadence. Look at the way he's moving. Watch and analyze? Perhaps because you're maybe trying to figure out what stance is this guy fighting from. Maybe he's in a fast low stance like the 10-day. He's fast, aggressive, constantly moving off the fastest moving average and bouncing right off that support. Maybe he's in a middle balance stance, still aggressive, but he's giving you slightly more room, more time to plan an entry, more time to plan an attack between entries. That's the 20-day. Or maybe he's fighting from a high stance. His movements are wider. There's more space between attacks. You have more time to plan your entries. Now you're looking at the 50-day. Stocks generally take longer to pull back to the 50 and they require more room. If you defend against all three the exact same way, eventually you will get cut, because every stock develops its own personality, and being able to adapt is key. Let's take a closer look at some of these examples. Look at every pullback this stock has made. Pulls back, reaches the 10-day, and buyers immediately step in. Then it happens again. And that's why this is called the fast stance, the 10-day moving average. Since this is an aggressive stock, be prepared to enter and potentially take profits more quickly than with the other two moving averages. The 10-day is about speed in an uptrend. Now, let's look at this stock. It breaks the 10-day constantly, and if you try trading this like the first one, you would get shaken out over and over again. But look at what happens when it reaches the 20-day. Buyers do show up again and again. This stock simply needs more room, and it's trading off of the middle moving average, which is our balanced stance, the 20-day moving average. And then you have stocks like this. This thing can break the 10 and 20-day, but it's finding respect on the 50-day. Buyers have determined that this is their level of attack, our wide stance 50-day. And this is why having a favorite moving average can hurt you. You're deciding how you're going to defend yourself before you even know which stance the swordman is using. Instead, let the stock show you its stance. Look left, study the previous pullbacks. Where did the buyers show up? Which moving average repeatedly acted as support? How much room does this particular stock actually need? And I promise once you understand the stock's personality, you're going to have a much better idea of where the opportunity is for your next entry. So far, we have solved several problems. We know the stock is trending. We know not to chase it when it's extended. Real quick, don't forget to hit the like button and maybe even subscribe as well. So eventually the stock starts pulling back. And as it gets closer to the moving averages, my goal is to simply pay attention. And there's an extremely important distinction here. I'm not automatically buying just because price touches the moving average. There is levels to this. I want another layer of confirmation. And this is where one of my favorite trading concepts comes into play. The power of two. Look at the chart again. We know this stock is respecting its 20-day from the previous pullback. Something else is sitting almost exactly at the same area, a key level. So now we have moving average support and key level support within an uptrend. Two completely different pieces of information pointing towards the exact same location. And that's what I call the power of two. And this is where you can say I'm really interested. If this is also one of the A+ stocks in the market and the general market conditions are also bullish with a support in volume, we can now say we're looking at an A+ setup. And this is why moving averages are the one indicator I wouldn't want to trade without. Or if I could only have one, this is the only one I would need. Because think of how many problems we just solved with one tool. They help identify trend. They tell me when the stock is becoming extended. They give me the locations that I need to be watching during the pullbacks. They help me identify the personality of the stock. And combined with key levels, they can help me find extremely powerful areas of confluence. But none of this works if you're treating moving averages all the same with every stock. The 10 isn't automatically a buy, the 20 isn't automatically a buy, and neither is the 50. The real skill is learning to recognize which one matters to the stock standing in front of you. Just like our swordsman. You don't walk into a fight and decide beforehand how your opponent is going to attack you. You watch him, study him, you let him reveal his personality, and then you adjust. Study the swordsman, identify the stance, and trade the personality. Because sometimes the difference between getting chopped to pieces and being prepared for the next move is simply knowing what you're standing in front of. Since you made it all the way to the end, why don't you check this video out as well?